Ask an insurance broker and they will tell you that an insurer needs claims in order to survive. If you think about what we've been saying about cybersecurity in this series of videos, you also know that a cybersecurity incident is a near certainty. So you have a near certainty and an absolute necessity combined, and we're talking about cybersecurity insurance today. Hello and welcome to another in our TDW Tech Byte series on data breach response. Today we're going to speak about a very important topic because it's an essential element of your risk management approach to security incidents. So let's put insurance in the general context of risk management. Why do businesses take out insurance? Well, if you look at risk generally, what you're trying to do is to manage risk overall, by which you might do some things by contract, by maybe excluding responsibility or liability or putting a limit on liability. Some you might do through training policies, practices, and procedures. That's a direct management in respect of your internal response. But one of the other strategies, of course, is to transfer risk, and this is what cybersecurity insurance does. It looks at a risk environment and in respect of certain aspects of cybersecurity incidents. It transfers the financial responsibility for that from the business to the insurer, and it's measured and paid out in accordance to how the insurance policy responds. So that's what insurance is about. Why is cybersecurity more important in this day and age? Well, insurance responds to the risk environment around businesses generally. And in the past 15, 20 years, in particular, in the past 5 years, there has been a rapidly increasing trend in the threat posed by cyber to businesses. Hence, businesses have been approaching insurers looking for policies to be written to respond to those particular risks. And that is why cybersecurity insurance now is a much more common business policy for that discussion with your broker when you're looking at your overall insurance coverage needs. Looking at cybersecurity insurance, it's important to assess what it covers and also what it doesn't cover. So what it covers is the loss that flows from a cybersecurity incident or an information security breach. So the loss arising from that particular breach, what would that actually cover? Well, it will cover legal costs in respect of responding to claims or regulatory investigations. It will help also in relation to the costs of, say, external consultants such as PR firms and other advisors. If you set up a hotline to respond to the requests or queries of data subjects or other people affected by the breach, then it will also cover that. And it will also cover, and most significantly will cover, the forensic and digital and IT costs associated with exploring the cause for the breach, restoring the systems, and then building more resilient systems going forward. That element of the cost of the restoration of the system, that is the most significant cost, but none of the other costs can actually be discounted. So it covers quite a lot. And the other things you should look at in respect of the scope of the coverage is the types of things that will, or incidents that will make the policy respond. So it should, of course, respond to things that are direct attacks to the business, but it should also respond to third-party consequences. So maybe it's something that has affected a cybersecurity or a security incident in relation to an entity in your supply chain, or one of your customers who's now unable to fulfill his obligations under a contract by virtue of an InfoSec incident that has happened in their environment. That is one of the risks you may want to look at in making sure that it's also covered. You should look at the geographical coverage also. Data breach incidents are multi-jurisdictional by nature, so the policy coverage should also cover losses that arise in other places in which you conduct business. Some of the things you should not necessarily expect your cybersecurity policy to cover would be things like financial loss in terms of loss of profits, so not direct loss, but loss of profits or some other form of remote consequential loss. Classic example would be, it's unlikely that you would be able to claim for reputational damage and loss under cybersecurity insurance, unless you had specific requests and there was a particular way that that could be written into a customized, bespoke, and hence expensive policy for you. A policy won't also cover intentional or criminal acts. So it will cover the normal types of fines that might arise in respect of regulatory investigations, but not in respect of criminal offenses and not in respect of intentional, reckless acts of the persons who are involved. So these are things that you need to look at, particularly in respect of exclusions, so you're aware of the scope of coverage that you've got. How do you go about getting a cybersecurity insurance? Well, you should speak to your normal insurance broker, who will take you through the assessment and the factors that will influence the scope of coverage and the price of the policy. Usually that's influenced by things like the geographical coverage, the size of the organization, the number of people involved, the elements and configuration of your IT system, and your track record in respect of data, what you might call cyber hygiene. The other things that will be important in respect of the pricing will be whether or not you want to negotiate a deductible, whether you want to have particular limits in respect of coverage. These kinds of things will also help to manage the premium cost for that. So that brings us to the end of today's video. Today we wanted to speak to you about cybersecurity insurance and how that is a critical element in the data breach response.